mortgage rates is less relevant to the older generation, especially when they're buying a home. Let's go ahead and unpack that. Hey everyone, this is Zaid Hanna with the Hanna Group here, Real Estate 38, and I have two pieces of information here. One of them is from Census and the other one is from Credit Karma, and it talks about why boomers are less affected by mortgage rates. Why? Because they have a lot of equity into their home. They probably bought their home 30 or even 40 years ago, and now it has 3x or 4x in value, and they're simply selling their property to actually buy another one. So if you look at here, it says boomers are 35% less affected by rates. Why? Because they're buying their properties cash. The most affected are actually millennials. So of course, the main buyer and the dominant buyer in the market today, it has been millennials, but now boomers are coming back in, selling their larger property and buying a smaller property. So as you can see here in this graph, that boomers at 35% don't care if the rates are higher. Gen Xers 23%. Mind you, Gen Xers do have that highest income bracket out of these generations, and typically they're buying second homes and they're not selling their existing property. And of course, millennials are becoming of age, 32 years of age. That's when everybody kind of enters, and they're the most affected, or they have the less power in terms of the buying in this market, and that's what you're seeing in this graph. Now, if you look at this other graph, it says 69% of homeowners have either no mortgages on their home or have greater than 50% in equity into their home. As you can see, there's a lot of wealth sitting in these people's home equities. What does that mean for you, let's say if you owned a home? So this is the time for you to actually go and get your equity assessment. Of course, we're happy to do that for you if you reach out, but this means, hey, I owe $500,000 on my home and my home is worth $200,000. Minus the cost, what's the next property that I can actually buy? Or can I pull equity out of my existing home? I do want to keep that as a family home and I want to buy my retirement home. So of course we can assist you with all of that by doing an equity assessment value here. But as you can see, there are a lot of folks that have a ton of equity. It's actually in the trillions in the US. But the interesting part here, look at the one in red. And the interesting part, it says 1.7% of all homeowners have negative equity into their home. These are the people that most likely have purchased in the past 12 months. They barely put anything down and the market retracted a little bit. But if you had bought anything here in the past 3 years plus, you have equity in their home and you're doing very well. So that's the interesting part, how older folks don't care about mortgage rates and they're moving the market forward. Until then, feel free to reach out with further information if you're looking to enter the market and buy. 408-515-1613. Bye-bye.